Hello and welcome. Today we're diving into a really fascinating report from Axis Bank that's making a bold claim. India's economy isn't just growing, it's about to hit the accelerator big time. So what's really behind all this optimism? Well, let's kick things off with the one number that has everyone talking. And there it is, a huge 7.5%. That's the report's forecast for India's GDP growth by the fiscal year 2027. Now, just to give you a sense of what that means, that's not just a little bit above average, that's projected to be one of the fastest growth rates for any major economy in the world. But here's what's really cool. This 7.5% growth isn't happening in a bubble. The report shows this rare trifecta. High growth is expected to happen alongside low inflation and even falling bond yields. It's that sweet spot, the kind of healthy, balanced growth that economists just love to see.
Okay, so you see a number like that, and the big question is, what's actually fueling this fire? Where's all this momentum coming from? The analysis says it's not just one thing, but a bunch of powerful factors all clicking into place at the same time.
The first big idea is actually pretty simple. Imagine the economy as a car that's been driving for a while with the brakes slightly on. The argument here is that those brakes, which were actually deliberate policy choices to keep things stable, are finally being released.
So what does releasing the brakes actually look like? Well, it's a two-part move. On one hand, you've got the government easing up on its budget tightening. And on the other hand, the central bank is making it cheaper for everyone to borrow money. Both of these moves are designed to get more people spending and more companies investing. The foot is officially coming off the brake and moving towards the accelerator.
But this isn't just about taking the brakes off. The engine itself is getting a serious upgrade. We're talking about deep, long-term stuff here. Things like a much simpler tax system and updated labor laws. These are the kinds of changes that make the whole economic machine run smoother and more efficiently for years to come.
And all of this leads us to the private sector. And wow, are they in good shape. I mean, look at this. Indian companies now have the least amount of debt compared to their earnings that they've had in a decade. They're lean, they're profitable, and they're sitting on cash, which is the perfect setup for what happens next.
All right, so let's put the pieces of the puzzle together. You've got companies with hardly any debt, they've got a ton of cash coming in, and you add one more thing to the mix, their factories are getting incredibly busy. So what do you think happens when you combine all three of those things?
Yep, you guessed it, a brand new investment boom. This chart shows something called industrial capacity, which is really just a fancy way of saying how full the factories are. And right now, they are humming, running above their long-term average. When your factories are running at full tilt, you have no choice but to start building new ones. And that kicks off what's called a new capex cycle, which is a massive engine for economic growth.
All right, but hold on a second. Normally, when an economy is growing this fast, with companies investing and people spending, you get a nasty side effect, inflation. It's like the economy gets a fever. So what's the deal here? How is India supposed to avoid that?
It's the question you're probably asking yourself right now, isn't it? This whole thing almost sounds a little too good to be true. But the report tackles this question head-on with some really compelling data.
Well, the report's answer is fascinating. It says, hey, if you ignore all the temporary noise, like when a bad monsoon messes with food prices for a month or two, the real underlying inflation is actually super stable. This measure, called median inflation, has been chilling at a very calm 3% for about a year and a half.
So what in the world is median inflation? Think of it this way. It's a super clever method for measuring prices. Instead of averaging everything, it just looks at the price change of the item right in the dead center of the list, totally ignoring any wild swings at the top or bottom. It gives you a much cleaner picture of the real trend.
The secret ingredient, the report says, is this thing called economic slack. It's a simple idea, really. It just means there's still a bunch of spare capacity in the economy that can be fired up to meet all this new demand without jacking up prices. It's like a factory that's only been running one shift. It can easily add a second or a third shift before it has to worry about building a whole new plant.
And look, they say it right here in the report. The main argument is that this slack gives India a really unique window of opportunity. It can grow much faster than usual for a few years, using up all that spare capacity, before the economy starts to really overheat. It's the perfect Goldilocks scenario. Not too hot, not too cold, but just right.
Okay, so the domestic story looks solid. But, no economy operates in a bubble, so how is India's relationship with the rest of the world shaping up during all of this?
First up, a quick definition. You hear this term all the time, current account deficit, or CAD. All it means is the difference between what a country buys from the world, its imports, and what it sells to the world, its exports. A deficit isn't a bad thing on its own. You just want to make sure it's at a healthy, manageable level.
And the good news on that front? The forecast looks really reassuring. Even with the economy booming and buying more stuff from other countries, that deficit is expected to stay at a very healthy, totally manageable 1.3% of GDP. It's a strong signal that India's global financial footing is stable.
And a huge piece of that puzzle, a real superpower for the Indian economy, is its services sector. I mean, think about it. While India might buy more physical goods than it sells way, way more services. And that powerhouse services surplus does a fantastic job of balancing the country's global checkbook.
And there's one more little boost helping things along: the currency. Basically, when you adjust for inflation, the Indian rupee has gotten a bit cheaper for other countries. And what does that mean? It just makes Indian goods and services that much more attractive and affordable for buyers around the globe, giving exports another nice tailwind.
All right, so we've looked at government policy, we've checked on how healthy companies are, we've talked about inflation, and we've covered the global picture. Now let's pull all these threads together and see what the big picture looks like. What you're really seeing is this amazing upward spiral. First, the government takes the brakes off, getting the ball rolling. Second, those deep reforms make the whole economic engine more powerful. Third, healthy companies are ready and waiting to invest. Fourth, that economic slack is the secret sauce that allows all this growth to happen without causing an inflation problem. And finally, a stable global position means the whole journey isn't likely to get derailed by outside shocks. And this is what it all adds up to. When you put that 7.5% forecast up against what's expected for other big economies, well, the picture is pretty clear. India isn't just growing, it's on track to be the fastest growing major economy on the planet, and by a pretty wide margin at that.
So, that leaves us with this one massive question. Is this it? Is India actually entering a whole new era of sustainable, high-speed growth? If you believe this report, all the pieces are definitely falling into place. Thanks so much for tuning in.